According to CNBC, 145 million American-owned real estate investment trusts REIT. Landlords have been able to increase U.S. residential rents by around 18% over the past 2 years according to Redfin data and WSJ. According to Fidelity, REITs are supported for dividend growth and potential valuation appreciation as rent inflation increases. According to WallStreet Journal, real estate has a long history as an inflation hedge, based on the principle that income generated by buildings tends to keep pace with consumer prices. A housing shortage is pushing up home prices in many developed markets, so fewer people can afford to buy and must rent. REITs, including American Homes 4 Rent and Invitation Homes, have significantly outperformed the S&P 500 since inflation breached 4%. Source: Wall Street Journal. In any given year, the stock market fluctuates, causing prices to drop. With this in mind, the next recession will hit once the economy slows down and investors start pulling out of stocks. Real estate investing, such as a real estate investment trust, is one way to protect your assets from the coming storm. In this video, we'll explore why you should invest in a REIT for when the next recession hits and how to do so responsibly. Real estate investment trusts (REITs) are a popular way for investors to gain exposure to real estate projects and companies without having to manage everything from research to loan approval, negotiating and managing tenants, keeping track of maintenance, and more. In other words, as an individual investor, you don't have to worry about the nitty-gritty aspects of running your project. Instead, you can focus on growing it beyond what you could do as an individual property owner. And if the next recession hits, these real estate investment trust investments might just become your best friend. We spent hours to put this video together for you. Don't be shy to like us. It will help us a lot. During the recession, why should you invest in real estate investment trusts? Real estate, being a long-term investment, offers stability and security in these tumultuous economic times. Invest in a REIT and you get steady, long-term growth. You don't have to be an expert to invest in real estate. And REIT gives you the opportunity to invest in properties that are leased to businesses or other entities rather than directly owning them privately. The value of real estate can fluctuate, but the trend is upward. Wait, what are REITs? According to investor.gov, a REIT, or real estate investment trust, is a company that owns, and typically operates, income-producing real estate or real estate-related assets. There are retail REITs, office REITs, residential REITs, healthcare REITs, and industrial REITs. To name a few, there are both publicly traded and non-traded REITs. There are different risks and cost structures and liquidity factors between the two. Please see our other video for more information. Not everyone has the patience or the capital to invest in real estate. Fortunately, there are REITs that can give you an edge without requiring a lot of capital. We'll explain how to invest in REITs if you want to keep a lid on your finances. These investments are not only excellent to invest in a recession, they offer great returns too. What are the advantages of investing in REITs? These trusts offer many advantages to investors, including diversification, liquidity, and lower taxes compared to directly investing in individual properties or real estate projects. According to investor.gov, there are 3 advantages of investing in REITs. 1. Real estate is part of an investor's portfolio. Investing in actual real estate properties can be an expensive investment option. Many investors find that a REIT investment allows them to diversify their investments. 2. Regular dividend payments. Because of the rules by which REITs are established, REITs have to distribute at least 90% of their taxable income for the year. 3. No double taxation. REIT investments do not incur the double taxation that can often affect an investor's return in a typical operating company. Why are REITs a good investment choice? The housing market crash of 2008 shook the entire real estate industry. It's been a rough road back for many investors, with the average real estate market cycle lasting approximately 10 years. Recessions are inevitable. Real estate investment trusts thrive in the midst of economic uncertainty. Investing in REITs can be a great way to diversify your portfolio without having to pick individual stocks. Investors who want to buy real estate, collect rental income, and operate businesses in the same company can invest in REITs. REITs have been one of the most popular investment options for long-term savers. Their popularity is not surprising. They offer a chance to invest in real estate. This can be a good way to diversify your investments and hedge against inflation. These real estate companies invest in properties such as single-family homes, apartments, office buildings, retail outlets, factories, hotels, and other similar businesses. They also own land, which can be developed and leased. How do I invest in real estate stocks? Investors may find suitable REITs to suit their investing plans based on their financial goals, risk tolerance, situation, and time horizon. REITs with dividend yield provide above-average dividend yields. REITs are a great way to get above-average dividend income. These stocks buy real estate properties and lease them to tenants. They then collect rent and distribute dividends to shareholders. REITs with strong growth prospects offer excellent growth prospects. We're not talking about the next few years here, but rather the next decade. REITs with substantial liquidity provide you with high liquidity. That's the ability to readily convert your stock into cash. That's a crucial feature for someone who may have suffered a major financial loss. You need cash to pay your bills, make investments, and take care of your family. Give us a like and comment below to let us know what you would like to learn more. This content is strictly for education purposes only. We do not provide any investing, tax, or legal advice whatsoever. Please consult with the professionals in order to make an informed decision for yourself about your situation and conduct it accordingly.